So let's talk about the auto loan crisis, especially the subprime market. It's collapsing and it's going to get worse. So we are on pace to reach over 3 million repos by the end of the year. We've hit record highs, delinquencies, deficiencies, and defaults. And even worse, now that the basically cracks are showing and they can't hide it anymore and they have to tell the public about it, it's much worse than what they're actually saying. And so in this video, I'm going to explain how it's currently affecting the market, what's going to happen to it in the future, and more importantly, how's this going to affect you getting an auto loan moving forward. The subprime auto loan market right now is a complete dumpster fire. Banks are losing millions of dollars every single month. Now, to understand how we got here, we need to go back to 2020. So back in 2020, dealerships and manufacturers were starting to lobby to banks and the government to say, hey, look, we need some sort of assistance to help move these cars because the automotive industry basically can't fall on its face and it would impact millions of Americans. And because of this, they started doing all kinds of lending. Now, if you remember at the beginning of 2020, they were giving out auto loans where you didn't have to make a single payment for a whole year because they were so worried that nobody was going to buy cars. And what happened? People started buying cars like crazy, especially when the stimulus money hit, and that cleared all the dealerships. But then they found out they couldn't get any new inventory. So all of a sudden, every car basically started going up in value. People were charging $50,000, $60,000, $70,000 over MSRP. This is where you get the idiots that were paying $100,000 over for Cybertrucks, $100,000 over for Hummers, and then on top of that, people were paying $40,000 over MSRP for Toyota RAV4s and Hyundai Palisades. It was an absolute crazy market. But because of what the banks did earlier, the bank said, no problem, we'll go ahead and lend whatever you want because at the end of the day, we're just going to bundle this paper and sell it on to the next guy and it's not our problem. And this continued on for quite some time. I first started noticing this back in 2022. I was rating a bunch of auto loan portfolio that a local dealership here wanted to sell to a bank, and I started to notice a trend. Every loan that was issued after 2020 had a much higher default rate compared to the loans previous in 2019, 2018, and 2017. So when I brought this up to the lender that was going to be purchasing these loans, I told him, hey, look, I think there's something up with these numbers. All these loans after 2020 are starting to default at a much higher rate compared to their old loans. I think you should stay away from these and just buy the older loans. And the bank told me, don't worry about it, we're going to buy them anyways. And so for the next 2 years, banks were buying as much portfolio as they possibly could. The reason is the more they buy, the more money they get to borrow from either the Fed, hedge funds, or private equity. And so this means that they're making a vig on every single dollar. And what they would do is basically bundle up all these auto loans and sell them off to other companies, individuals, hedge funds, whatever, so they can diversify their portfolio. And because of this, the demand got so crazy, they just kept overpaying on this horrible paper. Just like if you ever watched the movie Big Short, it's the exact same thing. People weren't taking the time to see all the problems. So for the rest of 2022, I made it my mission to post as many videos as I possibly could about the auto loan crisis, explaining it in detail so people would understand. I went on podcasts, I went on TV shows, even major news networks to explain how this is basically a ticking time bomb. Now, because of this, I got a lot of notoriety, but I had a lot of people that were very upset because they didn't want to rock the boat when it came to lending, because once banks stop pulling back, it affects everybody. And that's exactly what happened in 2023. The cracks started to show. Banks started noticing a much higher rate of defaults and deficiencies with loans that were created 2020 and beyond. And so what did they do to combat this? Well, usually what banks do is they offset their risk. So they'll say, okay, you know what? We're only going to lend maybe 90% of LTV, where before they were lending up to 150% LTV. They got to have 20% down instead of 10% what they had before. They would basically make lending much harder to get. And so not realizing they were thinking they were offsetting their risk, they actually doomed themselves. This was the nail in the coffin that set this whole thing in motion. So if we fast forward to 2024, everything they did in 2023 basically blew up into their face and made things much, much worse. Now, because they started tightening down on the lending and not issuing as much loans, they weren't able to outrun their bad debt. And because of this, they were giving out less loans, less money, which brought back the demand of cars even lower. And if there's not enough money going out there to buy cars and there's not enough demand, what happens to vehicle prices? They start to drop. And because of this, this is the major effect that I'm going to talk about here in a minute depreciation is what's going to affect most of these banks lending in the future. But all they did was basically ruin their own portfolios. And now they have nowhere to hide. They're freaking out. So what did they do? They tightened up even more. They started saying, you know what, we're only going to get to good credit customers. We're going to do this, we're going to do this. But it's kind of hard to issue one good new loan when you have maybe 3 or 4 bad auto loans right behind it that are taking up all your working capital. And subprime auto lenders had nowhere to go and nothing to do. Now, I'm going to explain why this is so important for subprime auto lenders and how it works. Now, whether you're a big bank or even let's just say you're small, local state credit union or state bank, when they want to borrow money, they go to either the Fed, private equity, or some sort of investment firm that will give them money to lend to basically the community. So every quarter they'll go up, hey, we want $50 million. So what is the bank going to do? They're going to be required to show their portfolio as collateral. And what these other people that are going to be issuing the money is going to look at their portfolio to see what kind of value it is, because this is their collateral that they're going to hold against giving them this money. Now they're going to look at their mortgages. Okay, mortgages are okay. They've dipped a little bit, but nothing crazy. Credit cards. Now, credit cards have much, much higher debt now. Instead of seeing that as a bad thing, some of these guys see it as a good thing because they're charging more interest. So they were able to kind of squeeze out of that. But once they get to the auto loan portfolio, there's no ducking or dodging it. The first thing either the Fed or some of these other investment firms or private equity is going to say, hey, out of all these auto loans, you have a lot of deficiencies and defaults. What's going on here? And then we see your collections is really poor. Now, collections is basically what they have to pay after they repo the car. So they're losing all the way across the board. And then on top of that, what they're going to do is they're going to reevaluate all their loans with today's books. And remember, 2-3 years ago, people were paying stupid amounts of money for crazy cars. So all of a sudden, let's say they had a $30 million auto loan portfolio, they're going to look at it and they're going to rate it at $15 million because of the defaults and because the assets that are behind these loans are not really worth the actual $30 million that they think it is. And this is what happens to banks, and this is what crushes them. They have 3 options. 1, they don't get any money at all. 2, they get a lower amount of money. And then 3, they get it at a much higher rate. They were going to charge them 3% on this money. Well, now that they see all this risk when it comes to their portfolio, they're going to tell them, well, you know what? Now it's 6. So instead of you getting a rate of 6%, now they have to give you maybe 9 or 10. So this way they can make some money on their paper. And then what happens is as the money costs the banks more, they tend to lend less and they get even more restrictive when it comes to lending. And this is what leads us to 2025. The problem that they're having is they're not issuing enough new loans to outrun some of their bad loans that are behind them. And the best way I can explain this is imagine running downhill and there's a snowball behind you. Doesn't look too bad 2 years ago, but now that thing has gotten to a massive size and eventually you're going to get tired and it's going to run you over. That is the subprime auto market right now. No matter what they do, no matter how many times they try to change their lending and try to get people a better credit into these subprime categories, it's not going to work. It's just going to have to explode. Now, what happens when these banks are not able to get more money to lend? There are a lot of what we call zombie banks or dead banks. They're not making any money. They're basically just there on paper collecting whatever they possibly can. If you know a lot of the subprime dealers here in Las Vegas and in other states, ask them, reach out to your local dealer and say, hey, how many banks have you been working with stop lending? There's quite a few all across the United States where they just won't lend any more money. Right now, they're in crisis mode. They're trying to worry about collections to get enough money because if they can show their collections are good enough, maybe the Fed or a hedge fund or private money will give them some more money to lend out to hopefully outrun some of their bad debt. But this is where we stand. Now, because of this and the way it's going to blow up, I really think what's going to happen is the government is probably going to step in, just like they did with the bank loans, and say something has to change. Now, they did it with these student loans not too long ago where you can't get a $200,000 degree for basket weaving. I think they have to do that with auto loans. I don't want it to happen because I don't think government should ever be in anybody's personal finances. But unfortunately, Americans can't get out of their own way when it comes to financial responsibility. We are literally, I hate to say the word, retarded. They will give away all their money to drive a car to impress people that don't even know them or don't even like them. So I hate to say it, something has to change. And unfortunately, in our culture, everybody wants to drive the nicest, coolest car they possibly can. I've never seen more people that make $30,000 a year driving $60,000 Mercedes and BMWs. It just absolutely blows my mind. When everybody asks, like, how come I haven't opened up a dealership? It's because I like to sell regular cars, something that's affordable. And I hate to say it, the way the current climate is, people don't want nice and affordable. They want to be flashy. They want to buy something that they literally can't even afford. Do you realize that there's more people with $1,000 car payments ever in history than today? Think about it. Your neighbor and probably half the people on your block have $1,000 a month car payments, and they're not driving Ferraris or Lamborghinis. They're driving maybe a brand new truck or a Tahoe, or even worse, an EV. Don't even get me started on those. The top 10 basically cars that have the most days on lots are all EVs. So all these things are basically combining and absolutely destroying the subprime market. But I would love to know your opinion in the comment section below. What do you think of the actual market? Did you know some of the things that were going down behind the scenes when it comes to banks actually lending and bundling up all the portfolio and selling it off? I really recommend you guys watching The Big Short. It's a great movie. Just think, instead of saying mortgage, just say auto loans, and it's the exact same thing. They're just bundling crap and selling it off to somebody else. It's like they're playing hot potato, but nobody wants to get stuck with the potato. That's exactly what's happening right now with really bad auto loan portfolio. But anyways, I want to thank you guys so much for watching. Please follow me on Instagram at Lucky Lopez. Sorry I had to do this video inside the office. I'm going to be outside for the rest of the week. We got some cool stuff that we're building out, doing some flipping cars. We'll see you next video.